Hey guys, welcome back. We are still doing the November 2017 question paper. In this video, we're going to be looking at question 5 of that paper, which focuses on inventory valuation. This is also a very important topic in accounting, so you need to make sure that you do enough practice. So without wasting any more time, let us jump straight into the question. So the question here, question 5, is obviously inventory valuations, 35 marks for 20 minutes. So the first one is going to start with just a basic understanding of the concepts. So they say choose the correct words from those given in brackets, write only the words next to the question number. We do have our answer sheet here. All right, so let's start with 5.1.1. So here they say the specific identification or weighted average stock valuation method is best suited for products of similar value purchased in large quantities. So if you're purchasing large quantities of goods, so let's say like you're purchasing sweets, you wouldn't be able to specifically identify which sweet is this one. So the thing that would actually make sense is to weight those sweets and average them. So the answer for 1.1 is the weighted average method. So let me say the weighted average. 5.1.2, they say cost of sales is determined at the point of sale in the perpetual or periodic inventory system. It's the perpetual inventory system, because remember, in the perpetual inventory system, we are constantly calculating cost of sales every time we make a sale, whereas for the periodic inventory system, we use the opening stock plus purchases plus carriage on purchases minus closing stock. That's how cost of sales is calculated. So yes, it will be perpetual. That will be the correct answer there. So perpetual. And then the third question, stock valued according to the FIFO, first in, first out, or weighted average method. Determine the stock on hand by recording the cost prices of the most recent stock purchases. So this is FIFO, because in FIFO, the most recent stock is the stock that you're going to have on hand, and then you're going to apply those cost prices that were the most recent. So yes, so we're going to put here FIFO, first in, first out. And then they say in the periodic inventory system, carriage on goods purchased is recorded as an expense or an asset to the business. So as we said, when you're dealing with the periodic inventory system, when you calculate cost of sales, you say opening stock plus purchases plus carriage on purchases, and then you subtract the closing stock. So the carriage on purchases you add to cost of sales, and we know that cost of sales is an expense. So in the periodic inventory system, that carriage that you incur, it becomes an expense. Whereas in a perpetual inventory system, it becomes an asset because you capitalize it to the cost of inventory. So it will be an expense under the periodic inventory system. It will be an expense. All right. So let us move into questions that are a bit more calculating in terms of like the value of inventory. So 5.2, we have a business here which is called Hot Wells Pty Ltd. So this is a private company. You are provided with information relating to Hot Wells Limited for the 3 months ending 30th of September 2017. The business trades in motorbikes and helmets. Mike, the owner, wants to assess his stock records before any price increases during the year. All right. So required. So we're going to start answering with motorbikes and then move on to helmets. So they say calculate the value of the closing stock of motorbikes, obviously, using their specific identification method. So let us try and calculate that amount. So let's go into the information. So information A, you can see the information there, that's the information on motorbikes. And in this, they've given sort of like information in terms of the types of bikes that you have so that you can be able to specifically identify which ones are on hand. So you have in the beginning of the beginning of July, you had the AO2 model, and then you also bought the AO3 and AO4 and added them into stock. And then those are the units that were sold. Okay, so we're going to calculate by looking at each model and applying the cost of each model. So we're going to start with AO2. So for AO2, there's 12 units at the beginning, and then an extra 6 was bought, and then 8 was sold. So that would be 12 plus 6, and then you say minus 8 because that 8 was sold, and then you'd get 10 units. And then that 10 units will be at the cost of 24,300 because that's the cost of the AO2. So what I'll do is I'll say AO2, we're going to say, obviously, we're going to say 12 plus 6 minus 10. And then you will multiply that by 24,300. Close the bracket, and that should give you 243,000. And then we're going to move to the AO3. So the AO3, let's see the AO3. So the AO3, there's no units at the beginning, and then we bought 15, and then we sold 11, and then those units were bought for 27,400. So what we will do then is to say, we're going to say 15 minus 11, and then we want to multiply those by the cost price of the AO3, which is 27,400. And then we're going to get an amount of 109,600. And then we also have the AO4. The AO4, let's see what you got for AO4. The AO4 don't have stock at the beginning, and then we bought 18, and then we managed to sell 10. And then we the cost price that we incurred is 31,600. So we're going to say, I'm going to say 18 minus 10, right? And then we're going to multiply that by the cost price, which was 31,600. And then we're going to get an amount of 252,800. And then if you add all these together, so if you say 243,000, you say 243,000, because you have to add them all together now, plus 109,600 plus 252,800, you will then get an amount of 605,400, which is the value of the closing stock for motorbikes. Cool. So we've answered the first question, and then let's move into the second question on motorbikes. So they say, Mike requires your advice on 3 different models of motorbikes in which he's trading. Explain 2 points of advice. So let us look at these motorbikes. So what I identified is that the AO2 first isn't selling that well, and we seem to be buying a lot of it because we had 12 units, and then we bought 6. But we only managed to sell 8. And this is the cheapest of these models that is not selling. So the first point of advice that I picked up, I would say, reduce the price of AO2 to increase sales, and then also consider discontinuing the line because it is the least selling while it is the cheapest. So if you are selling products and you have a product that is the most cheap in your store, but it is the least selling, you might want to consider discontinuing that line. But also, before you can discontinue it, you obviously want to sell the units that you have remaining so you can reduce the price in order to increase those sales. And then I identified also something about the AO3. I think it's doing very well. I mean, we bought 15 units and we sold 11. So, so I said, I would say stock more AO3 as they are more popular and they are a mid-price range. So they are mid-price range. Obviously, someone that doesn't want to buy the cheapest thing in the store, but also does not want to buy the most expensive, they can sort of like find a middle ground in the AO3. And then the other advice that I would have also considered putting in if I had to put 3, the AO4, this is the one that's actually, it's making the most money in terms of like the unit, the gross profit per unit. So you might want to say increase the sales, find a way to increase sales on that one, and push it more than the others because you get more profit from it than any of the other models. But we were asked for two points to offer advice, and we'll give those two. Thank you guys for joining. See you in the next lesson. Cheers.